Hey everybody, good to be here with you today. Last class, last webcast of the week, Market Movers. Glad to be here. My name is Brent Moores, joined alongside Mr. Mike Fairborn. He's a good friend of mine and a wonderful resource too. So as you have questions, feel free to type those questions in the chat between Mike and myself. We'll do our best. Just a reminder, this is a half-hour session, so we're going to try and get through as much as we can today. It's good to have Mike back, and just always a reminder, he teaches that ThinkScript class, which immediately precedes this class on Fridays. Check that out. And also make sure you follow us on X at Brentmore CS, at Mike Fairborn CS for additional content throughout the week. The information today is for general informational purposes only. It should not be considered an individual recommendation or personalized investment advice. And specific securities used are to demonstrate anything are just examples. They're not recommendations. I'm not going to deal with options today, so I'm not going to go through the options disclosures, but the paper money software application is provided for educational purposes only. All investing involves risk, including the possible loss of principal. And so what do? We're going to look at the general trend of major market indexes, talk about what moved the markets this week. And we'll do a fair amount of technical analysis, talk a little bit of fundamental and economic data too. So here's where we ended up. Markets just closed. You may have heard the bell. Here's the SPX. Okay. So in any case, this is the SPX. Let's count them. 1 day up, 2 day up, 3, 4, 5, 6, 7, 8, 9. 9 days in a row up on the SPX. That is the most since 2004, I think it is. I think I heard. So that's quite a rally we've been on. But I think it's important to consider this. Where did we come from? So what I'm going to do is I'm just going to do a plain chart, just to look at a plain chart. And I want to just kind of look at the drop that we've had. So I'm going to go low to high. So that was about a 21% drop on the SPX. We have now, at this point, come back about 17%. Of course, we're still down. Well, we'll compare apples to apples here on this. Hold on one quick sec. We are still down about 7.5% on that chart there. So we've got a little ways to go, but we've really made a huge progress on our way back up. So what's your expectation? How long till we hit there? Are we going to reverse? I was looking before the show today at historic SPX returns. So these are just years return. And so let me just go back. I'm going to go back 7 years here. In 2024, 23% return positive. 2023, 24% return on the SPX. 2022, down 18% for the year on the SPX. 2021, up 28. 2020, up 18. 2019, up 31% for the year. That was 2019. 2018, down 6% on the year. I pulled data, I just did a quick Wikipedia search on this. 1961 to 2024, the median, 12.4%. 12.4% gain. So where are we going to end up the year? I don't know. Right now, from where we started the year, where are we at right now? Down about 3 to 4% on that. So if we were to get to the average, the median here, okay, since 1961, we'd have to make up that 4%. And then another 12% in addition to that by the end of the year. Is that going to happen? I don't know. It may, but just be aware. That's kind of what we're looking at in terms of expectations. But, all this was before, a lot of news that kind of rattled the market. And so we're making our way back. In fact, to illustrate how we're making our way back, let me just point this out. Here's the percentage of companies in the S&P 500 that are above their 50-day moving average. We're above 50% now. Okay, we're above 50% now. We were down at as low as 4%. So it seems like the bulls are winning right now, and it's hard to believe that after a couple weeks ago. So there we go. Just wanted to make you aware that the Dow chart, similar, 9 days up on the Dow at this point. So you can see that reflected in different ways, including implied volatilities, the VIX. I got a whole bunch of stuff on there. Let me just clear that drawing set off real quick. Here's implied volatilities down to 22.5% on the VIX. So are we going to see 20 anytime soon? I don't know. But obviously, market concern in the market seems to be dropping somewhat. And you can see that reflected in gold prices. Here's gold futures. We're not going to trade the future, but just to give you an illustration of gold prices here. This is a 9-month chart, and we had quite a run up with gold. Well, part of the thing with gold is this. Gold, has been considered kind of this safe asset, the flight to safety aspect here on this. And therefore, what is this showing? This is showing that people are maybe a little bit less concerned right now than they have been over the past few weeks, the fact that gold has come down. So a drop in gold price may be a kind of a positive sign on the market right now. The market is a forward-looking entity, everybody. It's a forward-looking entity. And so when it tends to anticipate bad news and it tends to anticipate good news. So right now, the move up isn't based, I think, primarily on great economic data, although we had some today that we'll talk about in a sec. It's not necessarily based on great economic data, but it is based upon expectations of the future. And people's expectations of the future seem to have improved. Today, we started off on a good note. Even before we had the employment numbers, there was a statement from China, and the statement was, this was reported by Bloomberg. Ginny Marsh said, this is from China's Ministry of Commerce, indicated that U.S. officials have repeatedly expressed their readiness to enter negotiations with their Beijing counterparts on tariffs. Okay, so that actually got the market off to a good start today, and the market went up. Now, you may be skeptical. Scott Luck in the chat is skeptical. Scott said hopium. People are, hoping that the markets get better. That maybe they're, being overly optimistic. Because right now the data has been mixed. We'll go to that data here in just a minute. But the day started off with that Chinese statement, that statement, that report from Bloomberg. But let's look at the economic calendar here. And this is just on Schwab.com, by the way. If you go to research at the top of the page and go to U.S. markets and go down to calendar, you can click on economic, and you can go to today. I mean, I'll go back through the last week, but really what kicked us off today was that non-farm payrolls report. 170, this really surprised people. Surprised me, to be kind of honest. Actual number, 177,000. The forecast was 125,000 here on this. So that was a positive thing. And, in the, Jay Richardson, have we closed any trade deals yet? Not that I'm aware of, but, and so maybe you're skeptical of the movement, but this is a concrete number that was a good number here that came out today on that. Additionally, want more good news? Here's more good news from today. And I'm not trying to make a bullish case here. I'm just trying to report what I'm seeing. That was good news. Here's another thing that was actually fairly good news, and that is average hourly earnings. In terms of, there's different places in the market that inflation can kind of creep in, and this is a place where inflation can creep in, and we didn't see that right there. So you just got to be, that's what that is. Now, earlier this week, we had some different items here that certainly have affected the market. Nothing really on Monday. And, not all of these economic reports are created equal. We had a JOLTS report, for example, and the JOLTS report was low. So that's a job openings and labor turnover. This is not, generally you want higher as compared to the previous, we want that to be going up. This tends to be a pretty laggy number, though, backward looking number. And so kind of a delayed number. So a lot of people discounted that. And I don't think that didn't seem to affect the market that much here. Other things on here, consumer confidence was a big miss. The week was kind of this past week, we started off with some really kind of bad, not good data. Consumer confidence was a miss on that. The trade deficit was higher. Those aren't good numbers, not the good things that we wanted to see. But as we got on in the week, things got a little bit better. Wednesday, still, ADP number was a miss. That's not great. The really bad number was GDP, okay? This advanced GDP number, and it was from the expectation of 0.4, it was actually negative in the whole, minus 0.3. So that was kind of that was a sour note on the market. PCE, another inflation number, came mostly in line there. Okay, so it was actually slightly better. So that was a slight positive thing. Now, when we got to yesterday, see if I can scroll that here. So here's Thursday. Let's see. The only one on Thursday, the ISM manufacturing was probably the bigger number there. Slightly positive, so that's good. And then today, we already talked about today's numbers. Let's go on into next week. What's most likely to move next week? So let's click on next week's numbers and see what we got. ISM services can be a bigger report. The ISM services number can be a bigger report. That can affect things. Now, the reality is a lot of news can affect the markets more than this economic report. If trade deals start getting announced or something like that, that is likely to have a much bigger impact on the market than this ISM services number. Okay. Again, it kind of goes to backward looking versus forward looking things. On Wednesday, we got that FOMC rate decision. Right now, that FOMC rate, it's looking like there's not going to be anything, no change today. So no change next week probably in rates. What we can do is we can look at that Fed Watch tool. Next week, they're saying, almost 100% chance. This is just the Fed funds futures of no change in the numbers for that. But as you get out further in time, if you get to June, now you're starting to see a difference here in this. Now there's a much more realistic chance of a rate cut by June. And if you go out later in the year, go out to July, let's see, June, July, here's July. This is where we're currently at. Mostly, more than likely, according to the Fed funds futures, and this is of course no guarantee, we may see some interest rate cut there. Obviously, the administration is pushing, they would like to see a Fed funds rate cut. there's kind of a balancing act that the Fed is dealing with. We've just been through a spell of inflation. We're all aware of that. The lowering this can spur economic activity, which can kind of make inflation more problematic. It can increase inflation, okay, make inflation more likely. But it can also help spur economic growth. So you have the economic growth formula that ideally we'd lower it if we are concerned about economic growth, and people are concerned about that. But inflation could go up there. And so that is the concern there on this. If we have lower economic growth and higher inflation, that's what we call stagflation. That's the kind of the dirty word here that nobody wants. And so that is certainly what the Fed wants to avoid. I don't know what the right answer personally is. Everybody has their own opinions on this, but that's kind of the issue we're dealing with in terms of when you hear the administration saying we should cut rates and you see the Fed not cutting rates, that may be a reason why that is happening there. Okay, so anyway, coming out next Wednesday, the rate cuts is that rate cut decision is going to come out. Probably nothing going to happen with that, but you always just need to worry about and see if the announcement that occurs with the Fed, what's going to be the narrative, what's going to be the press release, Jerome Powell will make a statement, what's going to be in that Fed statement next week that could potentially impact things. In fact, also on Friday, even though it says no economic events today, on Friday you have a whole bunch of Fed member speakers coming out on Thursday. That could potentially affect the market a little bit as well. And that's pretty much it in terms of economic reports for the week there. And there we go. Okay, so let's move on, folks. Let's move on. The other factor that is probably likely to affect the markets is the earnings calendar. Let's take a look at the earnings calendar. Here's the heat map, but let's head on. We are in the middle of earnings season. This week was the largest earnings week for the S&P 500. As of now, I think I saw 55% of S&P 500 stocks have released earnings. So we're still in the middle of the season. We still have a lot of companies coming out. This is just S&P 100 here right now. And, you can see, obviously, we've had a lot of big companies. We'll talk about some of those. But we still have a lot coming out. So next week, that's Ford, Duke Energy, AMD, Disney, and we go on down the list here. And you can see Walmart, that's a couple weeks away. Home Depot, Lowe's, Target, so we still have a ways to go. All the Mag 7 stocks have released earnings except NVIDIA. NVIDIA is going to be coming out with earnings at the end of the month there. So let's talk a little bit about some of those companies that have earnings and have had earnings. A lot of tech companies, on X yesterday, I kind of joked that it was sponsored by the letter A because we had Apple and Amazon and Airbnb and it was all the A companies here. But, not all companies are created equal, and some companies move the markets more than others and are a bigger bellwether for the economy and move the rest of the markets more just from its single company. So here's Apple, down about 4% today. Apple actually had a top and bottom line beat. In other words, their top line, and for those of you who aren't aware, when we talk about top line, what we're talking about is revenue. Okay, that's top line. And when we talk about bottom line, that's the earnings, of course. You bring in money, you have sales, revenue, and then you have expenses. And when we factor out all those expenses, we come out with earnings. So when we talk about top line and bottom line, that's what we're talking about. They actually came out with better than expected earnings and revenue, but they're down almost 4%. Well, that is typical. Very often, earnings are not about earnings. Instead, earnings are about, guidance. What do they see going on in the future? And so that's what's happened. They did not provide guidance in their services, on their services sector. And some companies are a little bit more reluctant right now to provide guidance. And because there's just so much uncertainty. There's just a high level of uncertainty. And for these guys, that I hate to say it again, the T word, the tariff word, is providing extra uncertainty with them. They also said there's a potentially $900 million per quarter impact from tariffs on the company. So, but now a lot of that is factored in. That's not brand new news that it could certainly affect Apple. So that's why it wasn't obvious the market was just going to sell off on that news. But in any case, Apple is a company that is moving and it's falling. They had earnings, they fell. Another biggie that came out is something I should mention, because in the chat, was it Tech FZ1 mentioned, hey, there's downgrades on Apple. Yeah, Bank of America lowered the target price to 235 from 240. D.A. Davidson raised their price target. So when you come out with earnings, what you end up with is a lot of times you get a lot of analysts coming in and changing target levels or price targets. So same thing with Amazon. Amazon released earnings. Amazon, like Apple, beat on both their top and their bottom line. Their AWS, that's their cloud services, AWS, Amazon Web Services, I think is what that stands for, had a revenue beat. That was a good sign for it. Now, they were largely unchanged there, on the day, but they issued not great guidance either going forward. Again, a lot of uncertainty on that guidance. In terms of Amazon, what we got was, let me just pull that up real quick. Amazon, Barclays lowered the price target to 240 from 265. From 240 to 265. Excuse me, I said from 240 to 240 from 265. So they lowered it. Citizens JMP analyst raised the firm's price target to 250 from 240. Bank of America analyst raised the firm's price target to 230 from 225. Not huge changes, but it is interesting after an earnings, in my mind, some are raising and some are lowering. Janelle said the analysts need to get on a Zoom call. They're like 9 days. Yeah, and we see that. And so that certainly can affect the stock. In this case, the stock is mostly shrugging that off there. Let's talk about a couple others. Take-Two. So they dropped significantly not on earnings. It's not always earnings that these companies drop on. News on Take-Two. They are the maker of Grand Theft Auto, which, if you're not aware, is a huge video game, and they delayed they're delaying the launch again, I think, on this. It's delayed till next year. So that certainly hurt them. And what happens with their competitors? EA Sports, another video game maker, they're up 4% on the day. So I think part of that is probably, they haven't had earnings yet. Part of that is, they benefit probably from Take-Two not from delaying their thing. One other company on earnings that just came out last night, Airbnb. So Airbnb up 1%, top and bottom line beat. They expect a slowdown. I think everybody understood that there was going to be a slowdown. In fact, on X today, just a little while ago, I kind of just reposted something from Jeff Kleintop on I don't know, travel boycotts. I'm trying to think of the better word. Citizens of Mexico and Canada not traveling to the U.S. as much. That's their protest, their boycott. That can certainly affect Airbnb and other companies there. Other companies have just released and had news. Block is one, XYZ, and they're down 20% on earnings. Not good. And let's see, there was one more I was going to think of. I'm not sure if I can think right now off the top of my head that I wanted to mention to you. Instacart, or Maple Bear, which is the owner of Instacart. Earnings up 13%. Up 13%. So they benefit. I'm not actually familiar. I'm not exactly sure what their numbers were, but obviously, in a sense, it doesn't really matter what their numbers are in that we can tell whatever it was, the market liked about it. And so that's guiding it. There's been times in the past when if you told me a company was going to come out and these were going to be their numbers, I would say, oh, that company is going to be way down or that company is going to be way up. And then what's the market reaction? It's different. It's different than what I would have expected. So whatever it is, the market is liking that right now. There we go, folks. We are just about out of time here. I want to remind you, you can always follow us on X, Mike Fairborn, at Mike Fairborn CS, at Brent Moores CS. Next week, we'll see what comes. Also, make sure you subscribe to the Trader Talks channel from Schwab. If you've already subscribed, don't subscribe again because you'll probably end up unsubscribing. But if you look at your YouTube window, look in the bottom right, there'll be a button to subscribe there. All right, everybody, thanks for joining me today, and have a wonderful, wonderful weekend. Bye-bye, everybody.